Hello, welcome back. This is the anticipated and long-awaited 3 months to do this performance review. This is our second performance review. First one was end of September, middle December. This one started middle January, end of March. So we had a good around 3 months to do this. A good time frame. We had a lot of this was a whole different game. The game or totally different really setup we had this time. Um, First one was a big bullish, and this one's pretty bearish, right? So it was good to navigate that. Let's continue quickly. So, right, so this is the suit like all, since the beginning. In the beginning, it was normally, so here we went from January, started January to, yeah, 1 month we were basically neutral. This 1 month, we did have kind of a dip, then the deep seek, if you remember that, and then we are basically neutral. Then the big, and Nasdaq was also kind of neutral. We were very underperformed, like very close to it, so it was fine. And then here I switched sectors, and then I also over leveraged, which is the double combination, not good. And then that caused the big dip. So now I'm here thinking, I gotta go back to the original one. So the original sectors that I did since September to basically since end of September to middle of February. So I go back to that and we start winning a lot. We start winning. This is important to consider here. This was around 100% leverage. This half of this fall was 100% leverage, and then all this gain until I was neutral was 100% leverage. Here, I was going 60-40, and then here was 60-40 too. So really, it was a dip, and then I'm like, here if you look at the videos back then, I'm saying, if we recover from here, it means that the original strategy with those sectors work, and it does work, as you can see here. Now here we did have a kind of big dip, and that the idea here is I'm thinking and only I'm constraining myself to a certain ETFs, right? Because there's ETFs that are very volatile, and I was kind of going into those, testing them out here, and then we did gain, right? So that my hypothesis and ideas did work out. But is all that risk worth the extra 4 or 5%? That's the question. So new all-time high, that was good. So here we got Nasdaq. Nasdaq did very bad this quarter. Nasdaq did all the way going to new low almost. We're outperforming by a big amount. Here you can see we're outperforming by almost 19%. That's we're very good. We outperform 45% of days. And here we have the S&P. So the S&P, it's basically followed. It basically followed. I'm gonna say it hasn't fallen as much as Nasdaq, QQ, but it's still not doing very good. You would be negative 3% since I started, and here we 12.6, around 45%, similar thing. Dow Jones has done the best. Dow Jones really, this is not an updated graph that should be going up, and Dow Jones is around here. So Dow Jones is overall only lost negative 0.4%. We gained. This should be the 11, or my bad, the 12.6. So we're still outperforming by more than 12, almost 13%, right? But still even Dow Jones, right? Because normally you want to go into Dow Jones when you think it's going to be more bearish than bullish, because normally Dow Jones is the less volatile. So Dow Jones doesn't gain as much, but it doesn't lose as much. Then you have SPY, and then you have Nasdaq. That's normally how it goes. Okay, so here you have the whole thing. We did end at 0.24% average daily gain, which is very good. That's mostly accounted for. Wednesday and Friday did help a lot for that. Before that, last week we were on 0.04, so it wasn't too good. However, it was still positive, which you have to consider. At one point, we were like negative 20-something%. The recovery from there to here is a 42% recovery. The recovery was really spectacular, incredible timing. Really, when I stopped going into the nat gas, started to fall, which was what I was waiting for really since September, or since around November. I've been waiting for this drop. Finally happened. It's still happening. We'll see what happens later on, but it's a big advantage of that. We had almost 2 perfect weeks. Those 2 perfect weeks were hitting 3%. It was insane. It was like a 20% gain or something in, I think, 1 week or something like that. I don't know. And then there was another week which was around 10%. So really incredible gains. One of those gains though, those weeks, also going full leverage to recover. So, that would normally not happen, those big gains. But then the next week I was doing 60-40, it still gained 10%. So, and each day I was exiting and entering trades, closing them during the day, right? So, each day I had to find the opportunity and do it. So I was very impressed on that. The probability of that happening is incredibly low. Never seen that happen before. Incredible gains. That was this period, right? We had 10.08, 3, 3, 3, 2, 4, 3, 1, and then broke here, right? But incredible time period. I hope to see it again, but not to. I hope to expect that again, but it's just a rare thing to see, and that did lead us to increase this insanely straight line. Great line here. Over here kind of decreased quite a lot. Because I was mostly testing some other ETFs. But it's not a different sector, right? It's the same sector, but it's not like natural gas, or I don't know, like gold or copper or whatever you have. I don't know, like haystacks, right? So it's still very related. The correlation to SPY and those are it's very high. So I was expecting volatility, and I'm fine ending at 0%. I'm fine ending at that. So I took on the risk, and it worked out. Worked out in my favor, 12.6%, very good. But the important thing is that really staying to the ETFs I did from September to January, staying in those, and it's really only like NASDAQ, SPY, semiconductors, IWM, those type of things. It's very general market indices, nothing crazy. If it's only 40% and we have 60% as cash or SPY, right, and we have 40% as that, that should lead us to good outperforming. Maybe not 12.6%, but maybe like the first time it was 9%. The second time it was around in December, around there, we outperformed by, I think, like we were outperformed by like 6% or something. So the extra risk did lead to extra gains, but next time it could lead to around here, right? We were negative, I think, negative 7%. So in SPY we'd be barely underperforming, so it wouldn't be bad, but it wouldn't be great. I think right now this quarter, let's say, has kind of showed to it first demonstrated that you want to stick to what and I had been, it's not just like I randomly went into natural gas, right? I knew the ball game before I went in. It's just so unexpected, right? Because you got to be very careful with how much you're risking and all that, and your losses. I was only risking around 40%, and I put 60. I waited, and then I was like, doesn't make sense. And I put 100, and then I'm like, this isn't moving, so I don't get what's happening. You gotta leave when you don't understand. And then I left, and I went back into this, and then took the whole ride up, the whole way. Incredible. We were ending, I think, around here was around 10.5% was our max, I think, and then now we're at 12.6. So very good. So it kind of first showed stick to that. Second point, it showed that the original strategy with these sectors does work, right? Here I was going 100% on the trades, but those trades I would have done just with the 40%, so it'd still be good gains in the regular portfolio. So it kind of just proved that the original strategy worked. The original strategy, what I mean, is the sectors, those sectors I do work. Maybe this natural gas thing doesn't seem to work too well. Over here, it worked, but it's more volatile. So I think this is kind of like a testing out period, showing that the original ones do work. And now, I'm going to take a 2-week break, so it's going to be mostly just neutral, my yearly or my accumulated portfolio, where I have the whole year performance review, which is another video, which I'm going to post soon. And so that one's just going to show like 2 weeks, just 0, 0, 0, which I'm totally fine with because I'm outperforming by so much. I'm totally fine doing that. And take a good rest, because like every day I've been waking up, setting up trades, waking up at 6:30 right here in California. You got school, there's news, it's every day you gotta be on it. So it takes a toll on you, but it's kind of what you have to do. Yeah. Over here, so this quarter did lead to more red than green days. However, we did have 67% trades profitable. But however, we did gain close to 4% on average for winning days and lost in negative 2.45. So that big difference here, we did have more red days, but at least we did gain more in our green days, and then we're fine. So really, it's all about ratios, right? It's about how much you're losing how much you're risking. Like on your losses, you don't want to lose too much. On your green days, you want to keep it consistent. So yeah. Standard deviation, this is very high. We had a 4%. So really, before that, our first time we had around 1 point something. So times 4. Now it's also a more volatile time period, but it's still greatly higher. My idea is to decrease this. I think around 2 something is good. So maybe mid 2, so 2.5 would be great. Mid 3 around there, and make sure it doesn't take a hit. It doesn't take too much of a hit on the returns. Really, but I think the standard deviation just greatly increased because of the big down dip and then the big upside. So that increased this by a lot. I'm not really expecting that to happen, as if we go 60-40, that should not happen. Such a big dip to negative 23 and then up to 13% where we are now. Our performance, our returns are very good, but the standard deviation had to increase. Really, it's the only way for us to go up. Yeah, that's what was expected. SPY is not doing that great. It's losing 0.3% more than its gain, so pretty bad. It's negative 1%, almost on its average. That's not great. Its standard deviation is 106, so around 4x higher we are. So here we have the ratio, so it's how much you're winning in comparison to how much you're losing. So really, if you're risking and losing, averaging the same amount on SPY, in comparison to SPY. So you want this ratio to be equal or greater. It's greater right now, so that's great. And our losses could either decrease by more than 2%, and our gains could decrease by 2%. So we have a really good margin we're holding on here. But this is going to reset. So in 2 weeks, it's going to reset. We're going to be back at 0. So that's the 60-40 I'm hoping to decrease our standard deviation. And then on the overall, it should also decrease. Difference 0.812, so very good difference. Standard deviation is 3.9 almost, or x. So this is also what I haven't showed. This is, first time showed it for every performance review. I think I've had this. The last one, I'm pretty sure I had it. Here, so this is all the ETFs I've been in, right? So you see a majority was in success here. So this is around semiconductors, leveraged semiconductors, SPY, Apple, leveraged semi, Amazon, natural gas here, IWM, Nvidia, the VIX, and then here's some crypto stuff. So this crypto stuff is very correlated to SPY. Actually, it's surprisingly correlated. So but I was kind of just trying that out in like this last period, and worked out. But as crypto, it's more volatile. So my idea is to stick to what I did in the beginning, which is SOXL, TZA, maybe TQQ, right, SPXL, those type of things, which is just the SPY, NASDAQ, IWM leverage, and staying to those. It should be mostly similar return and less risk. So here we have the positive negative trades from each ETF. So you want this to only be in the 50% line. So most of them are in the 50% line. Some of them aren't. For example, IWM is the whole thing is red. Now, did that mean I lose a bunch? No, I barely lost on IWM. The thing is, I think like there's only 1 or 2 trades and they barely end in negative. So the whole bar looks red. So that's not great. It's also important your sample sizes here. So here SOXs, I did have a high sample size. It was below 50. So, but the other ones, SOXL here was 50. IMZD only did 1, so it's a big green bar. What else? We have Nvidia here. I did this a lot, the Nvidia shorts. So this has a good sample size. The VIX here has a good sample size, or short VIX actually. And then this is regular VIX. And then here, this Ethereum, these have small sample sizes, but they did lose quite a bit. However, this one, this one has a good sample size, but I gained a lot on these days, and I didn't lose too much on this one. So, it's kind of, you want mostly green, and we do have that, so that's good. Now our beta. So our beta is basically how correlated you are to the market. Now, when the dip and then the resurgence, so that's going to increase our standard deviation, and it's also going to increase decrease our beta by more. So our beta is close to negative 2.5. A negative 3x short would be a negative 3. So we're getting close to that, which is very volatile. My idea is to be around negative 1.5, right? So our overall since September is negative 166. You'll watch the video on that. it's the whole performance thing, and that should also be uploaded. It's probably after this one or before it, you'll see it. So negative 2.5. Now this kind of does make sense because I did do a lot of shorts when I was falling, so I gained a lot of money there. I gained a lot of percentage there, so that's good. And that's going to obviously decrease our beta, right? It's going to be more negative. Negative 1 beta would be like a negative 1x non-leveraged short to SPY. And so really, I mean, I did go into the right path, but just a lot of leverage. Our alpha, after the whole big dip thing, all that, we still have a positive alpha. Well, what is the alpha? It's just your return minus your beta times you have your beta, and then you have the market return. So it's kind of how much you're risking, and then you have the market return, and then you also have your return. So it's mostly your edge. And our edge is positive. You want to have a positive alpha. So if you have a positive alpha, you're doing good. And we're doing quite good. Our positive alpha since September is a lot higher. It's around 4-5 times higher. So, it kind of did take a hit, but we're still doing positive, which is very good. Constant Sharpe ratio. This is the only 3-month Sharpe ratio. So it's 0.4, and you want to look at this in comparison to SPY. So SPY is negative 0.5 constant. So that's, if you have it positive or neutral, you're doing good. And we have it almost, we have a negative 0. We have 0.4 basically. And here they have negative 0.5. So 0.8 outperforming the constant Sharpe is very good. If we look at estimated yearly from now to then, our yearly Sharpe is only 0.9. Before, our estimated yearly in our first performance review was around 2.4. So that's a big difference, right? And the Sharpe really here is important because it takes into consideration your standard deviation. And because we had such a high standard deviation, it decreased our Sharpe by a lot. Now, a 0.9 Sharpe is, it's good, right? The SPY averages around 0.7. So, normally your strategies want to be close to, if you have a 2 or above, that's great. You want to be around there. But, in falling periods, if your Sharpe is even positive right now, the yearly Sharpe estimate for SPY is negative 1. So if you're just positive, you're doing good. You didn't lose as much, so my plan is to decrease our standard deviations and stuff. So that's going to go into the full portfolio, but the next performance, it's not going to be those. So I'm going to do a start from 0 again. So the performance overall is going to start from 0. And yeah. So mean transactions 206. So that's buy and sell. That would be 2 transactions, or 2 buys. That's also 2 transactions. Sometimes it's 60-40, so that'll be 2 transactions, and then or you can have 2 sells, right? So this is the day trade really here. It's not really mean that I'm trading a bunch during the day. It just means where I'm closing the trade at the end of the day or before the end of the day to limit risk overnight, right? Because I'm sleeping, so I don't want to be awake the whole night checking it. So sometimes I'm not too confident, I just sell it off and I just rebuy in the morning. I mostly do that. So really it's around 0.6. So we're looking at, I'm reevaluating my trades 3 out of the 5 times a week. That's quite a lot, and considering I do that, statistically wise, you're projected to fail. You should be underperforming SPY by quite a bit. Most people underperform SPY doing a 3 to 5. So really, I think it kind of just demonstrates, how the strategy is actually working, and it's doing quite well. Even after a really bad period, we still outperformed by a lot. We recovered, we took opportunity, didn't give up. Kept on going. That's the most important part, right? So keeping on, showing that there's the original one has something, the original strategy where don't go into those other sectors, has something. Now I did go into those other sectors beforehand. It's just that the thing is, those sectors are so close to gambling that it's basically, you can win a lot, you can lose a lot, right? So it is what it is, and then I'll just limit those. Here we have the expectancy ratio. The expectancy ratio is just mostly your average gain times your profitability on trades minus your average loss times your losing trades percentage. And you want this to be positive. If it's positive, it means that your strategy theoretically has a long-term sustainability. There's some flaws with it, but we have it positive, so that's good. Quite positive. Over here, week's fees. So our fees account for only less than 1% of our profits. Right? So not the whole money in the account, just the profits. So that's very little. All my numbers are after fees. So the 12.6 is after fees. So it's, the fees didn't even barely accounted for anything. Over here we have the overall portfolio. So this is what we ended. We ended at 12.603. This is incredible. I mean, we were looking at, I basically did a 43% recovery since our lowest point. You know, when you lose 20% of your money and you have to recover it, and I wasn't looking to be positive, I was just looking to be neutral, hopefully. And being positive led to an insane run. Now it's also a combination of luck, right? I did get lucky, and where it started to fall, that when I went off, it started to fall. You know, literally on the Monday where I switched, on the first Monday I switched, actually I was betting on a bull. So I'm like, you know, it's always recovered, it will recover this time. You know, it did not do well, confirmed my suspicions of a bear trend occurring. This was near the peak. You know, started going to the bears, and then on the Monday, like 3 days after, it just earned a bunch. And I kept on earning after that, almost 2 perfect weeks, I think, something crazy. And so, you know, I did get lucky there, but also realized I took advantage of it. You know, each day I was going in and out, so I had to think of each day: is this going to be a bull? This is going to be a bear day? And you know, looking at now, you can see retrospectively, really everything was kind of bears. But you know, during the day, you're not really realizing it. So you have to recognize those opportunities and take them. And I did take them. The strategy found them. It did them. I did them. I earned money on it. And then right now, you know, it also took opportunity this fall, right? The week started green a little, but then ended big red, right? -2% red on on Friday, -2.6% Nasdaq. SPY was -2 or something. So, you know, this week really ended. Like I took the opportunity to. It kept on going down. I realized that did happen, so which led us to be 12.6%. You know, now some things to improve, right? We do have improvement. Improving would be sticking. Well, I'm gonna actually, you know, write it down right and do it, but sticking to a 60-40. So 60% non-leveraged, SPY or cash, only those two options. And if I think of a bear, that would just be cash. 40% is the leverage, so there's around, you know, TQQ maybe, SPXL, TZA, and their shorts, maybe SOXL. I'll make a list of those, which are the ones I normally do. Stay in that range, and that should give us our good edge to outperform. You know, the performance might be not 12.6, but it might be maybe 5 to 9. You know, last time when I did it, it was around 9%. Now it's 12.6%. During the December-January timeframe, it was quite high too. So I'm hopeful, right? It also really depends on the market conditions. So, you know, it's either, you know, we might not gain as much, but then our Sharpe ratio is going to be higher for less variability. So I think it's kind of just, this has been an experimenting time frame, which ended up working. And, you know, it's giving me hope that it's going to keep on working, right? The original strategy works. I took advantage of it. So, I mean, improving on that is important. So improving, you know, also not going over leverage, right? So not going more than the 40%. You know, if you go over the 40%, right, then, you know, you get overconfident, and then, you know, you average down, you keep on averaging down because you're like, this logically doesn't make sense. You know, you might be right, but you might be right in 5 days. And in 5 days, you're going to be negative 20-something%. And, you know, that's what happened. It's a game where you have to, you know, kind of realize, okay, right now it's not the time, get out. Go in when it is the time, or go in when it gives the signal, go in. You know, go in when it actually starts to happen. Don't go in anticipating what's going to happen. You want to, it's a good skill to have where you have patience and you wait for that. So I think I built up on that really well. You know, after the big loss, kind of just put me back, you know, kind of basically locked in. You know, I locked in really well for 2 weeks, greatest 2 week time frame. You know, the probability of that occurring is super low. It's incredibly low for our sample. It's incredibly low. So, you know, it strongly rejects the null hypothesis of luck. It kind of, the recovery, right? We went negative 23-something% to positive, I don't know, like 10% in 2 weeks. I mean, that's incredible. Now, right, I did go 100% leverage for around half those gains, and the other half was without even the leverage. So, or it was 60-40, and I mean, kind of, you know, just that huge run, which is incredible. And then, you know, we fell back a bit this week, and then we came back up, right, because it kept on falling. So yeah, I think great way to end the quarter. This is the best possible way. I mean, what more could have I asked for? I wasn't even expecting to be 12.6. If you would have told me this, I would not believed you. I would have been maybe -5 or 0, right? And we'd be close to going with SPY like last time, and I'd be happy about that. Now we're basically like 18% or whatever outperforming, or 15. Um, the next time I'm gonna go back in 2 weeks, take a break, 2 week break around there. I got spring break, so take a break. Every day waking up at 6:30, doing this, it's quite, it takes a toll on you. And you got school and all that. You got colleges, not good with colleges. It's just annoying. Who cares? But really, I got 2 weeks, and then I just put a bunch of zeros in the performance for my overall because I'm outperforming by so much. I can afford to do that. I'll put a bunch of zeros. When I go back, start the new quarter, it's gonna be from start of April to end of May. That's my plan. So it's a little shorter, a month shorter, so not as long, but it's kind of when summer starts. So my idea is to, after when summer starts, maybe do a new quarter. Also won't be here. I'm gonna be traveling a bit, so we'll see how that works. I'll think about it then. But yeah, great quarter. Expecting more to come. I'm excited. I'm hopeful. And just the more data I have of this working, the better, the stronger the case, the better it is, and um, the more excited I am to go in. Yeah. So hope you like this video. Go check out the full review, the full performance. That one has a bunch more data. It has everything since September. And then I also did the last week review, which basically has the same info. This covers that info and more, so you don't really have to watch that, but it's there. And yeah, thanks for watching. Bye.